Welcome to the deep dive. We're about to plunge into some, well, truly remarkable claims today.
Yeah, definitely starting strong.
The source material suggests you could receive a refund for all your debt in just 90 days with the IRS. And it doesn't stop there. It asserts quite boldly that any homeless person can become a millionaire in 90 days with just basic tech, maybe getting a check for over $240,000.
Those are incredibly bold assertions, absolutely.
Yeah.
They really set the stage for what we need to explore here.
They really do. So our mission today is to carefully unpack this specific set of claims, the historical narrative it presents, and the proposed remedies.
All coming from this one source.
Exactly. It's titled 1099 OID Masterclass, How to Receive a Refund for All Your Debt in 90 Days with IRS.
Got it.
And for you listening, it's really crucial to understand our aim here. We're laying out these claims, these historical interpretations, the suggested procedures, exactly as they appear in the source material.
Right. We're not endorsing it, not validating it.
No, not at all. It's about exploring this unique perspective, one that really challenges the conventional understanding of finance, of governance.
Think of us as guides, sort of navigating through what this specific material says, the framework it proposes. And what's particularly striking is how it builds its foundation on a very specific, let's say, reinterpretation of history.
Okay, yeah, let's unpack this hidden history, as the source calls it. It kicks off by claiming the American states were originally colonized by the British East India Trading Company.
Not as sovereign entities, though.
No, but as commercial franchises of the British Crown Corporation. That's the phrasing.
And this Crown Corporation, the material says, was primarily owned by European financial institutions, specifically mentioning German banks founded in the late 1700s by Amschel Rothschild,
Who, according to the source, standardized fractional reserve banking.
This connects back to what the source terms in ancient feudalist system, the pledge.
The pledge system.
Okay,
right.
where vassals, commoners would pledge their labor, their loyalty, even the interest in their personal property.
To whom?
To a lord of a manor called a trustee. And in return, these vassals got this limited right to occupy the land and live as a citizen.
Who? The catch was.
The catch was generating cash, crops, and other resources for the trustee. So the Masterclass is basically arguing that a commercial feudal system was embedded right from the beginning.
Laying the groundwork for this idea that America never really escaped some form of servitude.
Exactly, a commercial servitude based on this interpretation.
So that's the starting point, this alleged commercial feudal system. Then the source moves into a struggle for control.
Right, these European bankers, identified as the main shareholders of the British East India Trading Company.
The ones connected to Rothschild.
Yes, allegedly tried to exercise their security interest. How? By setting up a central bank of the United States.
And this leads to a pretty controversial take on history, doesn't it?
Very. It claims that when Congress refused to renew the bank's charter in 1811, the War of 1812 wasn't about what we usually learn.
But
It was fought specifically to reestablish the presence of the British East India Trading Company on American soil.
wow, okay, so that certainly reframes that conflict.
It does, within this narrative. And the material points to Andrew Jackson's later fight against rechartering the bank.
His motivation, according to the source.
His beliefs that the central bank was under foreign control of the fractional reserve system.
Okay, so this sets the stage for what the Masterclass calls a corporate takeover.
Precisely. It describes March 14, 1861, the day the 11 southern states walked out of Congress,
Resulting in Singdai.
which the source defines as Congress being left without a date and time to reconvene under democratic constitutional law, a kind of legal limbo.
And Lincoln's response.
According to this material, he invoked the emergency war powers rule and temporarily reconstituted the Congress under Article 1 military rule.
A temporary measure, supposedly.
Yes, but the Masterclass then claims Lincoln was assassinated before he could democratically restore the United States of America republic.
And the consequence of that in this narrative.
It allowed the European fractional reserve banking system to swoop in and reestablish its share ownership and security interest-based control structure over the U.S.
Wow. And this is supposedly cemented by
the source's interpretation of the 14th Amendment's Due Process Clause, which it calls questionably ratified in 1868.
How do they interpret that clause?
They claim it basically equates to martial law rather than democratic constitutional rule.
Okay, this historical narrative is really detailed. What happens next?
Well, the source alleges that this new military regime, calling itself Congress, passed the Legislative Act of February 21st, 1871.
And this act did what?
It created a corporation operating out of the District of Columbia known as United States of America, Inc.
In all caps. Okay.
And then, under the power of this corporation, the material says each state legislature created its own limited liability corporation.
Like state of Maryland, for instance.
Exactly. Acting as the agent and private international tax collector for the United States of America, Inc. Corporation.
So a nested structure of corporations, according to this view. Right. Which brings us through this very specific historical lens to the gold standard in debt discharge.
Another key pivot point. The Masterclass interprets FDR's Executive Order 6102 in 1933.
The one confiscating gold.
Yes. It sees it as a continuation of this war powers rule. Closing banks, suspending the gold standard, requiring Americans to surrender all of their gold to the custody of the Federal Reserve.
Which the source describes how?
As the primary U.S. agent for its foreign shareholders, keeping that theme consistent.
Now, this is where the remedy starts to come into focus in their story, right?
Exactly. The source claims that on June 5, 1933, this military entity calling itself Congress approved HJR 192.
House Joint Resolution 192.
Correct. And the Masterclass asserts this resolution granted a remedy to the American people for Roosevelt depriving them of their gold by discharging all of their debts.
It's discharging all debts.
That's the claim. It effectively declared these debts the exclusive liability of the Federal Reserve Corporation. So the burden shifted. Theoretically.
From individuals to the Fed itself.
According to this narrative, yes.
But there's always a but in these things. What's the problem here?
Well, the source outlines a major problem with this HJR gold redemption remedy. It says, exercising it was made deliberately complicated for everyday people.
Complexity as a barrier.
And crucially, the remedy is considered waived unless it is explicitly and correctly exercised.
Waived by default, essentially.
Yes. And the material claims the Federal Reserve, again, called a foreign fractional reserve corporation, use this complexity, this waiver by acquiescence principle.
To do what?
To lead Americans back into the default of its feudalist trust system. And it brings in legal principles here, specifically Admiralty Maritime Law, citing the Erie Railroad v. Tompkins Supreme Court decision from 1938.
Admiralty law, how does that fit?
The source uses it to argue that individuals are bound into a commercial trust at birth, almost like cargo or property within this system.
So if you didn't know how to claim this remedy, you just lost it.
That's the implication. You defaulted by not acting, by acquiescing.
Which brings us to the birth certificate. That plays a central role, doesn't it?
A very central role. The Masterclass claims the Social Security Act of 1935 wasn't just about social welfare. It was created to give legal identity to the defaulted HJR 192 remedy holders.
Okay.
And here's the really striking claim. People are bound into the feudal trust created by this arrangement by the birth certificate registration. Again, through Admiralty Maritime and martial law.
Making people.
Making them human capital or trust property in default by acquiescence, identified by the fictitious all-capital letter legal name linked to the Social Security number.
That all CPS name you see on documents.
Exactly. The source calls this whole thing a scheme.
A scheme to do what?
To allow the Federal Reserve to register everyday people as chattel for the national debt, all based on their presumed acquiescence and waiver of their HJR 192 remedy.
And this remedy, what is it called now in their terminology?
It's known as private equity or your private exemption as the principal.
Your private exemption.
Yes. And they claim this is actually reported on the tax transcripts of all major corporations today as a deduction or prepaid account.
So the idea is your existence itself, tied to that birth certificate, created some kind of hidden credit, a prepaid account.
That's the core concept. Your private exemption as the principal, it's presented as the original source of value in this whole system.
Okay, so wrapping up this quite intricate historical narrative, what's the bottom line, according to the source?
The Masterclass concludes that the United States of America, the corporation, is now a corporate trust.
And its debt.
Its national debt is funded entirely by the assumed opportunity to use your private HJR 192 remedy or exemption as the principal. Meaning this gives you all of the same rights and powers as an investor or shareholder in the corporation whenever its agents or anyone using its currency system tries to bill you for public debts.
So the whole point of the Masterclass
is to educate viewers about this assumed acquiescence and, critically, the procedure by which they may exercise this remedy to cure their default.
Right, to wake people up to this hidden system and show them the supposed way out.
That's the framework they build, this idea that default is assumed through silence, but there's a way to reclaim your position.
Okay, quite a foundation. So how does the source say this default actually plays out in today's financial world?
Well, it continues tracing the lineage of this alleged corporate structure. It claims the British East India Trading Company Crown Corporation eventually reconstituted itself into the IMF or World Bank at Bretton Woods after WWII.
And then?
Then it incorporated itself again in 1973, becoming the DTC or Depository Trust Company.
DTC, also known as Euroclear elsewhere?
Correct. This structure, they claim, is still operating today.
And how does this supposedly connect directly to us, to individuals?
The source makes a very direct claim about your birth. It says, when you were born, the corporate one world government operating under the IMF created a name in all capital letters.
That all APS name again.
Yes, with the intent that the private natural person, you, would stand in for the name and thereby become liable for all public contracts.
Including everyday things.
Everything. Utilities, rent mortgage, vehicle payments, credit card payments, and virtually all forms of private and public debts.
And the mechanism for this binding.
It claims your parents signing your birth certificate unwittingly registered the bill of lading or title to your body and all of its assets into the collateral ownership interest of this corporation.
Bill of lading. Like cargo.
Exactly, the implication. Through a constructive trust formed under the principles of Admiralty maritime law, your body and assets essentially collateralized.
That's a heavy claim.
It is. And it continues. A bond was created derivative of the birth certificate trust indenture, representing accounts payable for a taxpayer account held by the Treasury.
A bond based on the birth certificate?
Yes. And then security interest in the bond was then transferred to the DTC.
Okay, so it moves into the financial plumbing.
Right. And derivative securities of this bond are created whenever someone goes out into the public and accrues public debts or living expenses.
And the value of these derivatives comes from?
Nothing more than the assumption that the person will abandon their exemption as the principal following the transaction. Your presumed default gives them value.
They provide an example for this, right? Something about large retailers.
They do. It claims corporations like Walmart, Sears, and Costco remain open and operational whether they have actual human customers or not.
How?
By running off of the securities they created and sold, which were backed by your exemption as the principal, which is tied back to that original credit or value of the birth certificate account.
So the underlying principle they're stating is?
That for every bill or debt created out in the public representing an account receivable, there is a corresponding credit or bond with a SUSIP number in the private representing the corresponding account payable.
And this account payable is?
Income created by the corporation using our exemption as the principal or original creditor. A hidden credit matching every debit.
This is where the idea of default really hits home then.
Yes. The source states, quite dramatically, everybody on planet, 99%, made into IRS agents, commonly called employees, with no hope or known date of ever retiring defaults.
How does it explain this default legally within its framework?
It says when someone has abandoned their HJR remedy claim on the accounts payable side of the ledger, they're considered to have defaulted. A default judgment is entered.
And this is why?
This is given as the reason in mortgage foreclosure cases, the courts almost always rule in favor of the bank, because the homeowner supposedly abandoned their exemption as the principal when they took out the mortgage.
Wow, okay. And these defaults, these assumed equity defaults.
The source claims they are sold by the DTC as equity securities. Their value is entirely based on the assumption people have abandoned their remedy.
And when these securities collapse?
That's when, according to the source, world recessions such as the 2008 housing crash occur. It's presented as a consequence of enforcing these assumed defaults on a mass scale.
It also mentions something about EFTPS accounts.
Yes, it states the corporation is maintained if there's an EFTPS account enrolled in AutoPay that runs on your private exemption, HJR remedy, as the principal beneficiary to the World Bank Trust, like an automated siphoning of this value.
Which leads to a pretty stark warning.
Extremely stark. If you do not regularly redeem your account using this lawful remedy, you will effectively be forced to live as a zombie forever.
A zombie.
It describes this as a kind of genocide in which the private will of the individual is overmastered by the public force, and they functionally become zombies or IRS employees.
Okay. So after painting this incredibly complex and, frankly, alarming picture, how does the source suggest you actually do something about it? How do you avoid being a zombie?
It starts by suggesting you look at your account transcript on irs.gov, the one linked to your SSN and birth certificate.
Which IRS reps supposedly call your account.
Right. And then it makes a key distinction.
Okay.
It separates accounts receivable money you owe the IRS from the redemptionist or private side of the ledger. This side focuses on accounts payable money, owed back to the account's owner, beneficiary, or their representative, the hidden credit side.
And this is where original issue discount, OID, comes in.
Exactly. OID becomes the central mechanism for the proposed remedy. The source defines it using official references, IRS publication 1212, the U.S. Code, as the excess of an obligation stated redemption price at maturity over its issue price. It's basically the difference between what a debt instrument is issued for and what it pays out at the end.
And they use an analogy.
A rather poetic one. The discount at which Abraham received the gift of life from God, trying to frame it as a fundamental value.
How broadly does the source claim OID applies?
To virtually all evidence of indebtedness a natural person could generate from their everyday living costs.
Like groceries, utilities?
Groceries, utilities, insurance, car notes, leases, credit cards, mortgages, pretty much everything.
And it mentions Form 1099 OID filing requirements.
Yes, specifically for holders who are a middleman or nominee. This becomes absolutely critical to their argument.
How so?
Because here's the really provocative claim. This nominee reporting requirement covers virtually all collecting parties in your immediate surroundings right now.
Meaning the electric company, the landlord, the bank.
According to the source, yes. People or entities who are trying to unlawfully deny you your HJR 192 remedy by refusing to apply this undisclosed credit to the debts for the living expenses which they are currently billing you for.
So everyone billing you is potentially a nominee.
That's the assertion. Everyone around you right now is functionally your nominee or a fiduciary trustee administering your all-capital letter estate.
And they failed to do what?
Failed to honor their 1099 OID reporting and payment requirements, thereby operating in bankruptcy and tax delinquency whenever they try to charge you for public debts.
Wow, that flips the script entirely on who owes what.
Completely. It leads to the source's big aha moment. The sooner you realize that all debts in a fractional reserve commercial environment are actually income.
Debts are income.
The sooner you will realize that this income is actually the unreported earnings of your estate and that you have a remedy through the IRS as the beneficiary of the estate.
Okay, but if this income exists, why isn't it showing up? Why are accounts supposedly blank?
The Masterclass claims millions of dollars of unreported bonds and securities. Income on the accounts payable side was generated just by your existence and expenses.
But the payers, the entities billing you.
They failed to make these reports and failed to make payments of the monies over to the U.S. Treasury.
Leading to?
Resulting in the United States bankruptcy and national debt or tax delinquency, which has existed since 1933. That's their explanation for why your IRS transcript might look blank on that side.
And they connect 1099 OID payments to something specific in the IRS manual.
Yes. They reference IRS Manual 6209 Section 2, claiming it defines 1099 OID payments as Class 5 gift and estate taxes.
Okay, so let's get practical. What does the source say about the nature of the transactions? How does this play out with a simple bill?
Any bill you receive in U.S. dollars is described as an admission by the public collecting party.
The person giving you the bill.
Yes, who is now framed as acting as an IRS agent, an admission to the corporation's previous use of our credit on the private side.
So the bill itself is proof they used your hidden credit.
That's the claim. It means the income admitted to on the bill must be reported by the public IRS agent, person who gave you the bill, to their own Internal Revenue Service on the form 1099 OID.
Showing amounts related to.
Amounts you unknowingly elected for backup withholding because you are, in this view, the security's undisclosed third-party shareholder or creditor.
But the source identifies a whole problem here. What is it?
That these agents, the billers, do not understand their fiduciary tax obligations under their own Internal Revenue Code.
They don't know they're supposed to file these 1099 OIDs.
Or, if they do, they fail to file the second 1099 OID for the backup withheld amounts, and critically, fail to send that money to the IRS.
Which constitutes?
Tax delinquency or commercial dishonor, according to the source.
And this dishonor is what allows them
to cause situations in which they appear to be collecting debts from you, foreclosing on your residence, or holding your person in public custody, essentially, to enforce claims against you.
Because they're operating in bankruptcy themselves, in this view.
Exactly. The source suggests they're effectively borrowing from your account.
How?
It claims they made estimated tax payments at the beginning of each tax year, using your exemption as the principal, and have fraudulently deducted the income they received out of your original credit.
And their tax returns.
Are probably enrolled in autopay at the IRS through the EFTPS, meaning they expect these deductions, and will likely not contest any Forms 1099 OID which appear on their side, but just let the funds remit automatically to the Treasury.
Okay, so this whole complex system leads finally to the proposed solution. What does the Masterclass say you should do?
It says, we, as the beneficiary of our foreign grantor trust, assume the role of the authorized representative or attorney-in-fact at international law for the entire estate. You step into that role.
In the action step.
The process is, we, our foreign virtual assistant, or our process server, lawfully file the Form 1099 OID at the Internal Revenue Service on behalf of the trustee.
On behalf of the person who sent the bill.
Yes. The justification is that the trustee, the biller, would have been obligated by their own Internal Revenue Code to pay and report this income anyway as a nominee in possession of funds from the strawman estate.
So you're just doing what they supposedly failed to do.
Correct. And as the beneficiary, the source argues, you have the right to submit letters of instruction for the distribution of trust assets held by our trustees.
And the 1099 OID forms are those letters of instruction.
That's how they're presented, as the format for instructing the trustee, via the IRS, to release the funds from your hidden account to cover the debt.
And this is how the Masterclass claims you can cure the default and potentially get those huge refunds.
That's the essence of the remedy they propose, based on this entire alternative framework.
Right. And that, I think, wraps up our deep dive into the 1099 OID Masterclass source material. We've definitely journeyed through a unique, very complex perspective on U.S. history, finance, personal debt.
It's certainly a lot to take in. We've meticulously laid out the source's core claims, discharging debt, potential refunds, all presented just as they appear in the information we were given.
Absolutely. And just to reiterate for everyone listening, our goal here was simply to extract and present the information from this specific source.
Yeah, no judgment, no endorsement. We were just guides through its intricate and definitely unconventional narrative.
So as you reflect on this, maybe consider this question. In an age where we're flooded with information, often conflicting, what does it really mean to be well-informed? And how do we navigate these narratives, especially ones that so fundamentally challenge our basic understanding of how things work? What stood out most to you from exploring this alternative financial framework? Something to think about.